here we've regained some of the ground that we lost last fall. Heading into spring, what drives tech?
Sure. So if you look at, in particular, for Amazon and for Apple, it's about the maintaining strength in the U.S. consumer, and then the cloud computing effort for Amazon. And then for Apple, it's really about finding new opportunities beyond the iPhone. But I do think that 2019, you're still looking at good upside, at least for both Amazon and Apple, on the cloud computing efforts for Amazon and Apple's ability to find opportunities beyond the iPhone.
Aaron, where are you looking for continued growth drivers?
Yeah, so I would say our top pick remains Alibaba, especially if we get some China resolution here over the next couple of months. Fundamentals remain very strong despite some of the China slowdown concerns for the company. We think valuation remains very attractive, less than 15 times in the core e-commerce business if you look at some of the parts basis. So that's our topic. Continue to remain bullish also on Amazon, especially driven by strength in cloud, as well as we think continued operating leverage in the business, although probably less so than we saw in 2018. And then Facebook, fundamentals remain strong despite all of the privacy concerns. There's just a few places that advertisers can really spend this much money besides Google and Facebook. So we continue to believe Facebook and Google combined get 80% plus of incremental dollars.
Aaron, is this all based on multiple expansion for you in terms of how you're thinking about the value?
Yeah, I think it's a combination. Probably less so for Amazon, but I would say definitely for Facebook, Alibaba, we think you can get some additional multiple expansion. A lot of these names are still sub 20 times earnings and growing 20% plus revenue growth. So we think historically still very undervalued for large cap growth at these rates.
Tom, I was a little surprised, not that Autodesk did well after the bell yesterday, but just their commentary on strength across a bunch of different regions. And not that you cover Autodesk specifically, but that's a company that deals a lot with building, has insight into manufacturing and trends there. Should we take that perhaps as a signal that in tech, slowdowns that we are hearing about aren't necessarily affecting all companies the same?
Well, I think the general environment for tech is still quite favorable to the extent that you have a lot of the economies across the globe that are doing well. The U.S. continues to do well, and you've seen some companies in particular do a really good job navigating some of the Brexit-related challenges in the U.K. So while I think there are enough reasons to be concerned about as far as some of the challenges, I do think that this is still fertile soil for tech, and with the low interest rate environment and a lot of new potential issuance later this year, it's still a good time to be in tech.
Aaron, you mentioned here a potential deal with China. If that includes some resolution on patents and copyrights and forced technology transfer, does that move the needle for technology in China for some of these tech companies to go in and follow Apple's moves in terms of making hay while the sun shines there?
Yeah, I think it's to be determined. I think that could open up the market for more software-like companies. Historically, China, as we know, hasn't invested a lot in software. One of the reasons we like Alibaba as well is it's the dominant cloud player in China. They're actually almost becoming a software-like player in China as well because they don't invest a lot of outside of China's software. So yeah, it could open up the market, but another reason to like Alibaba is it could be a key software player in the China market.
But it's kind of left Amazon in the dust, right? Alibaba, JD.com. And I was interested looking here at your guys' price target. There's a pretty wide range. Tom, you've got a price target on Amazon of $2,450, and my notes say, Aaron, that yours is $1,960. Guys, talk to me about the difference between your range. Tom, what do you think?
Sure. So basically, I think Aaron alluded to this. The big drivers for Amazon today are their most profitable businesses. Not only cloud computing, but also third-party retail and advertising. So I do think that investors are somewhat getting used to kind of the new Amazon, which is much more robust profit growth and potentially slower sales growth. But on the strength of those three items, I think that's why our price target, is $24.50. We're a big believer that their long-term margin will be much higher than it is today.
Aaron?
Yeah, and I would say I think we're both positive, but probably the difference is I think we're both probably pretty bullish on the cloud business. We have seen a little bit of a slowdown in the core consumer growth business. You've seen unit growth more in the mid-teens recently, so we have taken maybe a slightly more conservative multiple on the retail business, which has slowed, and that might be explaining the difference. But I'd say pretty bullish on the cloud business, maybe a little less so on core retail, especially we've heard some of the issues with India recently. So there might be some questions around how big Amazon can become in India with some of the increasing regulations there.